Okay, get the recording up and running. And welcome everybody. Sorry for the a little delayed in getting started. It is just after 3 o'clock. It is September 26th, Thursday, and it's time for our weekly traders coaching. I apologize for the delay. Like I said, my battery was dead on my headset. So welcome to the our weekly traders coaching, which is a partnership between Affinity Trading Institute and my company, Omega Institute of Trading. And my throat is killing me, so I'll be drinking some tea, trying to keep myself to talk for another hour. So really, we are here for educational purposes only. We're going to be talking about some trade setups. Please make sure that if you want to place these trades in your account, that you understand the risk is your own, and that I'm not here to give any recommendations. I'm not a licensed broker and don't plan to be. Of course, if you have to get in touch with me for any reason, you've got me at Ralph at Omegatrades and Ralph at Affinity Trading. And I'm currently working with Affinity, so you can get me in either location. I do work out of their office, and I do work out of my home office. So you can, if I'm not there, I'm here at my home office. And so let's get rocking and rolling. Did everybody get the email that I just sent out about an hour ago? I sent out an email with a couple of trade setups for Macy's, for 3M, for UPS, and so okay, good. Just wanted to get you guys out an email that some trades I was looking at, potentially getting into, where UPS broke this morning or at some time today, and I wanted to jump into a trade, and I wanted to let you guys be aware of it. So I did send out that email. As well as on Tuesday, I sent out the weekly watch list, and those stocks came out of that weekly watch list. So that's what typically our clients are getting every week from me. And so, Don, you did not. Okay. You can send me your email, Don. I'll make sure that you're on that list. But if you just registered recently, no sound. Testing 1 2 3. Testing. If you just recently were added to the list, then that could be possibly why. But if you want, throw me your email there, Don, in the chat, and I'll make sure that you are added. Okay, good. I'm actually going to trade headsets out because just in case this one goes out again, I don't want to have this to be a lingering issue. So I'm going to put another headset in here. So just give me 1 second. Okay. Okay. All right. Yeah. So it. Hello. Here we go. Right. So yeah, no, you definitely should be getting them, but I would definitely check your spam filter. Okay. So that's an email that had a few trades in it, and UPS set up pretty nicely here, and I really thought it was a good trade setup or a nice little move. You can at least look from a move from 89 to 92, which is $3. And so let's see. Let's go to the trade page. Let's see what we got in here. So I did get it to UPS a little while ago, and we got some trade setups on Target and MMM. I did get it, and Boeing right here is the other one I have set up as well. Celgene I got in. It's kind of going against me a little bit. I got to this a little while ago. Oops. Had a nice break this morning, and it's kind of right. No, it's still above my target entry. You're not getting sound. Just getting sound. Okay. Sorry, I'm just reading the chats. Most people are saying they've got sound. A couple of people are saying just getting sound. Garbled. Sound is broken. Audio pretty bad. Okay. See what we can do here. I'm sorry about that, folks. Let me look and go to the speaker settings. All right. Glad you guys told me. Okay. So you should be able to hear me okay now, right? Yes? Is this a better connection? Okay, good. Maybe it's because I have both of them plugged in. I don't know. I'll just unplug them. Sorry about that. We have a little bit of technical difficulties here today. Serves me right for not having this thing plugged in overnight. I'll just have to really monitor, make sure that it stays plugged in here, because it looks like the battery is failing on it a little bit. Okay. Anyhow, I really like this trade setup. Even where it is right here, and our stop loss to about 146.25. And so, it broke out of a flag. We've got a potential move.
Welcome to GoToWebinar. Web events made easy.
Testing, 1, 2, 3, testing. Testing 1, 2, 3, testing 1, 2. I think the microphone is working. I don't know, what. I tried to change microphones. John, I set these trades up through Thinkorswim. We can look setting them up through Trade Monster as well. TRDEMONSTER. Oop, how about I try the O instead of an I in Trade Monster? So yes, we can trade it out of either account. I've been having a lot of people that are trading out of Thinkorswim. But you can definitely set out of both places if you'd like. That's not a problem. So let me just go through some of the stocks that we want to look at. We want to look at Celgene. We want to look at UPS. Now, UPS today, okay. Macy's to downside, which is silver today. And there was one more that was in there. There was 4 trades in the email that I just sent out. Boeing was the other one. So Boeing set up nicely, and it could be the case. You can look Boeing as a short descending triangle. Let me delete this. And delete this here. Delete this. Trend line 1, delete trend line 2. Delete this up here. I don't know what's causing the cutout of my sound, if anyone is hearing a cutout. See if I can close anything else out of my... Maybe I just have a bad internet connection. I doubt it, but... So one being here on Boeing is kind of 2 patterns kind of built into it. It's got a short-term ascending triangle, okay, with the equal tops, like that, and it's about to get above there. But if I step back a little bit, it started to build. What we had going into this is we had a flag coming into this, but it's really starting to build. It's really starting to build a nice little ascending triangle here, which is kind of being a much more prevalent pattern because it's really going really nicely. So I'm going to do this off of the triangle that I sent an email to you. So we've got Boeing that we're about to break out on. We have Macy's, which did break, but it's kind of hovering. And let's see if we can get this thing to fall down before I get in. We've got UPS and 3M. So MMM is also creating a nice bull flag. This is a very nice bull flag. And then the UPS trade. And the question from Don is, what would be your projected price on BA? Good question. So BA, I'm going to look from kind of the low of the triangle, which really I could draw a little better than this. And looking at from about 115.85 and then to 119.47. So 115.85 to 119.47. So that's almost a $4 move. And so I would want to get it basically on the break just above today's, right around today's high. All right, Don, does that make sense? Okay, and so we've got order here in on Boeing, or at least I do have an order here to get in on Boeing. And the Boeing trade, let me see where I've got it here, BA. It's getting at $120.40. Let's see what that is. The high of today is 119.50. So I can readjust a little bit to get in about 119.50. So let me go over here and modify this. Let me Boeing cancel replace order. Oops, let me delete that. I gotta get rid of this. Right click on Boeing, cancel replace order on Boeing, and I really want to get it at 119.50. There we go. You see that? Hit yes. Send confirm. Boom. There we go. So I've got that Boeing trade in there with my contingent order. Does everyone understand what I just did there with placing that order? Does anyone have any questions on why I placed that order the way I did? I don't want to get in right now because it hasn't broken out of its pattern yet. Sure, John, no problem. So it's in a pattern that's telling me that I've got this resistance line up here, and this resistance line grabbing points that it's having a hard time breaking through, which is 119.47. And so I want to get above that line for me to get into this trade. Okay? And so I wanted to break above resistance, which would get me above today's high, and then I'm willing to take that trade, which is going to basically say I want to go with that momentum. I want to get that momentum to the upside, and I'm willing to jump in on the trade as this thing is breaking through resistance. But I don't want to get in this trade if it's just going to kind of hover around here and hit its head on resistance and fall back down. I only want to get in if it breaks on through a resistance line. It's going to give me a confirmation that the bulls are starting to take control. All right? And question about what you made. I just had a different price target in on my buy stop. So I wanted to adjust it to change the number. So I changed it from the 120 line to the 119.50, which is the area of resistance I want to get above. So what I'm doing, guys, is I like to place trades that follow the momentum of the direction that I want to trade in. So I like Boeing. I think it's a good stock. It's made a very nice run. It's kind of gone sideways a little bit. And for me to jump back in, I want it to get above and break through that resistance line. And the only way it's going to break above resistance is if buyers are stepping in. So I'm going to follow along with those buyers. And if those other buyers step in, then I'm going to be happy to jump in with them. That's why I want to get above that resistance line. Now, Celgene, I found when I was talking with doing a coaching session with one of the a coaching session I did today. Market purchase of option when Boeing hit that. Well, 119.56. Well, the resistance line that I drew, Paul, was 119.47. So I just wanted to get above 119.47. I went up a few pennies above that number, and that's why I wanted to get into Boeing above that line. Now, this is how I find some of my trades, is that I look at ETFs that track the major indices, and one of them is the IBB. No, Paul, that's not a market. It will be yes, it will be a market order, but I didn't get into it yet. It will get into me at a market order when it triggers above that strike price, or above the stock price. If the stock gets above 150, I'm going to get triggered at a market order. And I'm okay with market orders because I trade stocks that are very liquid. If you look at Boeing is trading 15 cents wide on a $100 stock, over $100 stock, so I'm okay with that. So okay, so let me go on why I find this IBB. This ETF that tracks the biotechs had a bull flag break here today. And so I said to myself, what stocks are in the IBB? And so I look up what stocks are in the IBB, and one of those stocks is Celgene. So, and we can place this trade also on Trade Monster too. I'll get that open right now for you guys that are using Trade Monster. And so when I said to myself, I said, all right, let me find stocks that are trading in IBB. Celgene is one of them. And so when I look at Celgene and what Celgene's doing today, it's breaking out just like the IBB is, as you can see from my chart. So here's a stock that's following what the ETF is doing. And because of that, I would be intrigued to take a trade on the stock that's breaking out with the that's going in conjunction with the ETF. Does that make sense? So with Celgene, basically you can enter right here, and we'll actually we can put that trade on here in the Trade Monster application as well. Options, go to Celgene. And I'm going to go to the November monthly. Let's deselect that. And I'm going to go to the 145. And I'm going to click on here to buy. And let's do 5 contracts. Send and confirm. Confirm. Filled. Okay. So now we have our Celgene trade in there. Why am I doing this and not the IBB? Because I do like to trade the underlyings in the ETFs. But if you're seeing a break in the IBB, there's nothing wrong with just placing a trade right into IBB based off the flag break that you see there. You know, IBB did break out today. And, you know, there is a move that's a really nice move in IBB. So they're really, that's really just a matter of preference of trading, you know, the stock over the ETF. Earnings are not in the way, so if there isn't an issue with earnings, I'm okay with trading that stock. If earnings were in the way, I would be more inclined to trade the ETF. Okay, when is earnings actually? When were they? Earnings were in July, August, September, October. So they're going to be sometime, in October. I don't really plan on being in the trade more than a couple of weeks. So the other reason is that with earnings coming up in October, the volatility will kick up the option pricing and give me a little extra kicker. With the volatility increasing in the option going into earnings, I have the potential to make money on the volatility increase. So, there's a few little caveats to why sometimes I'll trade a stock over an ETF. If I saw the same move and Celgene had earnings up tomorrow, I would trade the IBB. But since since Cell doesn't have earnings for another month, then my option will increase in price with the volatility increase. So Celgene looks pretty good. I like its move. The market itself, if you look at the spiders, is coming off its lows. It was up high, and then it kind of crashed down a bit here today. It is positive. All the major markets are positive right now. The Nasdaq, the Dow Jones, the spiders, SPY, the Russell 2000, the Rut's up. So everything is up right now. So let's hope we get a little bit of a push out of IBB. UPS is one of them that I sent to you guys here today, and UPS broke out pretty nicely here today. And I'm looking for a potential move. And let's see, what was the looking to buy when it gets above 91.55, which it's at right now. So 91.55 was kind of where I wanted to get in today. And that's where we are right now with UPS. So I think I have a trade in here on UPS. Yes, we're in it. We're down 15 bucks. All right. For the day, we're up 260. For the month, we're up about 1,700. And this is a new trade that we put on, folks. So really, we're making all of our money off of this new skin trade that that I talked about last week. So I'm okay with what we're doing so far. You can clearly see that the P&L since the open is really all off of the new skin trade, with a couple of $100 here and there off these other trades. And this new skin trade is only 2 days old. So if you did not get into the UPS trade, this is a nice spot to get into UPS. And you can see that we got a pretty nice move where we can expect probably another $4-ish and change move on UPS on the break above about 190, about 91.40. So 91.40 plus about $4 and change will get us up to $95, just over $95. And that's $4 would be, it's about a $4.50 move, so about 95 bucks. Does anyone like that trade, by the way? Does anyone like the UPS trade or the Celgene trade? You can say yes, Celgene, yes, UPS. Just curious if you guys like these things. You tell me. You guys want me to reset up the UPS trade? I can reset up that UPS trade for you if you'd like. And so that UPS trade, I'm already in for the November. I was talking with a client. So what we're looking at on UPS is I'm looking for about a $4.50 move, right? And I'm looking for that to happen in about a month. And so if I bought the October option, that $2.26 option, it's gonna be worth about $6. If I buy the $2.96 November option, it's gonna be worth about $6, just above. So I'm paying a lot more money to get a lot more time. So well, I'll get into that, Tio. Tio's asking the risk reward. And so right now, what we're looking at here is a $3 upside move on an option that's only worth $3. So my stop loss on something like this would be right below about $90.70. So if this does drop, what's that? That is 60 cents minus, let's call it 70 cents. Okay, not $70, 70 cents. Then I'm only risking, Tio, I'm only risking $1 or 90-something cents on this trade. Okay, so I had a really great discussion with a colleague, a client this morning about short-term options and long-term options and rolling. So this is one of those cases where there really is a nice, favorable reason to trade in November. If you look at the risk-reward of this stuff, guys, I'm either going to trade $2.26 or $2.96. So not much. There's a little bit of a difference, but not a big difference. Okay? If I'm wrong and this goes down 70 cents, then this is going to lose, it's going to be worth 91 cents. So let's call it $1. I'm going to lose $1.26 or $1.36 on this trade. On this one, it's going to go from 296 down to 206. So I'm going to lose 90 cents on this trade. So my risk on the November is 90 cents. The risk on the October is just over $1, about the same. The reward is about $4.50. Okay, so if this does go up $4.50, okay, good, sounds good, excellent. Tio's on board. Then this is worth $6. This is worth $6.12, about the same. So I have relatively the same risk, the same reward. The difference is your entry price, but I'm risking about the same with having extra time as the kicker. So this is why, in this case, I really, really like the November. My discussion with one of the clients today was, why not do the shorter term and then do a let it run for a little bit and then get into the longer, to the November, which is a viable option to do a, buy a 90 and then sell it and then buy the 92.50 in November as it's starting to move up, which is a viable way to trade, but the pricing is so indifferent that this one is really nice here at this level. So that's where I would trade UPS right now. Is I would just go in on a market order and go place this trade. I know it says limit. Depending on the broker you use, now a Trade Monster, they have really good pricing, so you're not really going to be worrying about it. Most significant brokers have good pricing. Let's go back to, where's this? This is UPS. And thank you for keeping me up to date on reminding me to trade sometimes through both platforms, because I do get so many people that are trading on Thinkorswim. So when I go down November 90s, it's got such a tight, it's 5 cent wide on the bid ask because it's a very high price, it's a high volume stock. So I'll go in here and I'll just place this, buy 10 contracts, and okay, with these guys going in at a market order or at a limit order, the limit is going to kind of get me in a few pennies, around where I'm at. But there's nothing wrong with saying, I'll just put a market order in right now. Okay, send and confirm. Send. I'm got filled at $2.97. Okay. Do I want to tweak it to save the 2 cents? Yeah, I am okay with, tweaking it, but if I want to get in right now, you know, just you know, just get in. If you're trading a good stock that's that is got good volume, you're really not going to give up much. So you're in it. Okay, so there you go. You're in at $2.95. Okay, cool. Now let's see where it goes. Now our stop loss on this sucker, like I said, is going to be just below the low of the day right here, which is well, going to be around this low of this day, about $90 and 70 something cents. Okay, so I need to go over here and let's see if I have my stop loss. I don't have a stop loss in place on UPS, so I'm going to right click, create a closing order as a stop. I'm set to the mark, and I want to create this to UPS, get me at or below 90.70. Okay. I don't use trailing stops. I use hard stops, and then I adjust them as I go. Sometimes what I found is trailing stops make me a little lazy. The hard stop makes me go in and check my positions every day, which doesn't take long at all. So I'll go in here and the entry was where we are right now. The entry was $91.54. So we're just right above our entry. So you see I have my sell position in there. And then let me do the same thing on Trade Monster. And I apologize if I'm losing my voice here. Let me go over to Account, Positions. Let me go to UPS. Grab this guy. And then hit Sell as a stop. And I want that trigger to be good till canceled. So I'm trying to read the pieces that are coming in. Do you have a spreadsheet or something we can receive via URL with all current positions and entry points? Shoot. I want to get the stock price. Darn it. Hold on. I thought there was a way to do your stops off of the stock price. Hold on, I have to cancel this order for a second so I can read this. Because I've got a bunch of emails coming in. I'm sorry. UPS is at 91.63, isn't it? Am I wrong? Are we at 91.63? Dan, the trades that I'm in now, here, see, I can probably send you fill orders over the last 30 days. Right here. You can see the Celgene, UPS, NUS, DF, Marvel, JP Morgan, a couple IWM calendars. Let's see, I can print this and export this thing for you as a web page or a CSV. Let me make it as a CSV. Account statement, export. Let's see. Because I know I can. And I can get you some of these trades. And this might help with your entry points. Hold on. Let's see. And I think the stock is trading at about 91.60, if I'm not mistaken. All right, let me open up the CSV file. I don't know if you can check again, Ron, and see if it's where it's trading. I might have a bit of a delay on here. Okay, so it's above where we thought. Oops, sorry, I'm bringing over my email. So I can clean this out. We don't have any forex positions. Here's the order history, trade history. Here we go. So this is what you were looking for, Dan. Let me clean all this up. Here's our trade history. And our P&L on some of these guys. Let's delete some of this. Sure, yeah, I'm just going to clean up some garbage. But yeah, you know, these are the trades that we're in right now. Execution time in this one account, and I'll send this to you. And that way you've got a list of the stocks that we're currently in. Okay, I'll leave this over to the side, and I'll be happy to send it to you in a little bit. Now, so yeah, I mean, you know, we're right hovering around the price that I wanted to enter at. So, let me see. Yeah, I'm okay with this trade. This looks really good. All right. Celgene is just off the highs as well, and that looks pretty darn good as well. So these are two trades you can get into right now. Okay. And then, by the way, is everyone following along here? Are you guys doing okay? Okay. I'm not getting any no's, so I'm assuming that you guys are doing okay here. Great. Okay. So, folks, think about this. I mean, you know, I want to go back and chase this new skin trade. We talked last week, all right, and we analyzed for everybody, and break above 95.02 was hit. Just to give you a kind of a, you know, a perspective on things. This trade, it's off the highs, but it's still a great trade. Okay, it's at $98. We entered at $95. Just to give you guys perspective, folks, this trade on my 6 contracts is up $1,500. Folks, that pays for an entire year of coaching on one trade. And you can see the losses are minimal. The Celgene that we're in, I got in on the high of the day, and Sarvesh can kind of attest to it. He was the one I was coaching with today. I wanted to jump into this a little bit earlier, but we were in the middle of setting up the trade, and it was running and running and running. By the time I got in a little higher than I wanted to get in, about 20 cents below here. 20 cents below on 5 contracts is $100. So, you know, I did chase it a little bit, but I'm okay with that. We got the Boeing set up, ready to go. We have our Dean Foods trade, which is buying some puts. It gave back some of its profits today. We've got this 3M trade. This is a setup for this trade I want to talk about right now. 3M is setting up really nicely. This is a classic bull flag trade right here. Okay. Now, I've had a couple of requests for a technical analysis class to go over these patterns that I trade. And I did get an email asking, why do I trade bull flags so much? And it's not that I like them. I like them a lot. They just happen to appear very frequently right now. So I am trading what I see. And bull flags are all over the place. So it's kind of become my go-to pattern. But the question I was asked is, can you do a technical analysis class? Yes, if you guys are interested, let me know. And the other is, why a bull flag? And it's because I see a lot of them. Yes, Mike. Ascending triangles. If you look at Macy's is a descending triangle. And here's a nice little lesson. Speaking of this, remember I said I did want to get into Macy's, but I want to get in on the low day? Well, look what it's doing into the close. It's making new highs going to the close. Okay? So, yeah, Mike, I'll put your question back so everyone sees it. I like bull flags. I like bear flags. Right now, there are a lot of flags in the market. Okay? So I am trading a lot of flags. This Macy's trade, if I was to take it, would be a descending triangle. But like I was mentioning on Macy's before, I like to get in on the momentum. I like to get in on the direction I'm going. I want the momentum of the trade I'm going to take. Pay attention to the wording here. I want the momentum on the trade that I'm going to take to be going in the direction that I think the stock's going to go. I want to take a trade where momentum is going in the direction I think the stock is going. Into the close, Macy's is making higher highs. It is not breaking down. So we only have 2 minutes left in the day. Excuse me. But look, it's making a higher high right now. Let me put this on a 15-minute chart. Here's the day right here. Macy's is on the high of the day. I want to get into this to a bearish trade only if it starts to break down again. So yes, I'm looking at bull flags. I'm looking at descending triangles. I'm doing a lot more short-term trading right now than I usually do because that's what the market is giving me, and that's where I'm having the most success. If I look at like my IBM trade that we took, that was based off of a series of bear flags. Okay? If I look at New Skin, that was based off of a bull flag. So, Mike, I do trade off of head and shoulders, bull flags, bear flags, ascending and descending triangles. But it's really a matter of whatever the market's bearing is what I really want to be trading. And to that point, I am more of a seller in the market than a buyer in the market. But the market right now is giving a lot of good trade setups with a very low volatility index, the VIX. So I am trading a lot more short-term directional trades because of that reason. Does that make sense? So I kind of mold my trading around what the market is doing instead of me having very rigid criteria that I have very rigid criteria for each one of my trading styles, but I have to see what the market's giving me so that way I can say this is why I want to trade that. My rules are very, very, very specific. So the 3M trade, which obviously the market's closed now, is a nice trade setup that I have, and that's off of a bull flag break. And we're looking for a move from about 113 to 122. Technically, I mean, the real number is here, I'll give it to you. The number is about $8.31. Okay? So I'm working for an $8.31 move on 3M. And Mike, did that answer your question, by the way, Mr. Chandler? Good. You're welcome. So I'm looking for about a month of a trade, and I'm looking for an $8.31 move when it breaks above the high of today. When it gets just above the high of today. Today's high was 121. So about 121, I'm looking for an $8.31 move. So basically, $8.31 above 121 is what I'm looking for. Okay? So I got to look for a move of $8.21, but I also have to add another, right now it's at $20.66, so I got another 35 cents to that. That way it gets the stock to 121. So 35 cents on top of this, let's just call it $8.50. If this stock, guys, makes a move $8.50, then my $6 option is going to go from $6.80 to $14. So that is what? That's 7 plus 7 is 14. So that's a $7.30 profit. My stop loss, okay, I'm going to write this down. 831 is my target. My entry is 121. My stop is going to be just below 119.80, which would be just below my ATR. 119.80. You guys all following along? And my time frame is going to be about 3 to 4 weeks. So I've got this order in here on 3M to do exactly that. Just want to adjust the price again on that. Okay. Any questions on this trade right here? Oh, if we do lose, let me put I got to give you the stop loss number. Sorry about that. If we do lose, the stock's going to go down to 119.80, which is 70, let's 80 cents from here. Let's call it $1, just so we're safe. So if we lose $1, folks, look at this. Look at this risk reward. If we lose $1, okay, we're going to get it at 680, and it's going to be worth about 538. So we're going to lose roughly what, $1.40? So think about this. We have about $1.40 or $1.50 stop loss, and we have a potential $7 win. So we have a really nice reward to risk ratio. Would you all agree? Do you guys like that trade? What do you think? You tell me. Okay, so that's the trade I've got set up, and we're going to be monitoring that. Now, if you guys are still looking to join us here as a member and continue to get these trade setups, then just join us through Affinity. And become a member, and you'll continue to get these setups. And I'll be sending these out every week. I send out an email that's going to have a watch list, and then I'm going to send out an email of things that are trading that have now breaking out of that watch list. Let me show you the email that I sent. Let's see, that was Tuesday. Here's the weekly watch list. So I grabbed this watch list, and I pulled out of it Macy's. I pulled out of it Boeing, 3M, okay? And so the only one that wasn't in there was Celgene. But again, I would have sent that out if I had a little more time today. But at least these trades, I knew today we were going to be able to talk about it anyway in our coaching session. So I sent the link back to everybody so you guys can join through Affinity, because I do have my affiliation with them. They handle all the billing and everything like that. And folks, don't miss out on this. I mean, is anyone here? I mean, you tell me, what did you think of what we're talking about here? Does this stuff resonate with how you'd like to see a trade go out? I do both, Mike. Right now, I've been really, the question is, do I trade weekly or monthly options? I do both. I do weekly options when I'm selling more than when I'm buying. And right now, I'm really being a buyer in the market. When I am selling, I would sell covered calls. I would sell calendars and diagonals off the weeklies. But right now, the market is really giving us a really good premium and rewarding us for buying those monthly options. And the time decay loss isn't going to crush me like on the weeklies when you buy. Make sense? When I sell, a different story. But right now, I'm not really doing a lot of selling. But I love the weekly options for the selling side of things because they decay very quickly. So like on Celgene or UPS, or look at that, we ended up on the day up $140 on UPS. Look at that, guys. Here's the end of day on UPS on everything. So we ended up the day up $550. So we're up $2,000 over the last about 3 weeks of trades. But I do love weekly options. Okay? Are there any other questions I can answer for you? I know we're going to go a little long today because we had a little issue with the audio, and I sincerely apologize about that. I will go out and buy another headset. It's always good to have another headset. I have two, but I love that wireless one, and unfortunately, I guess it might have died on me. Are there any other questions I can ask you guys? Do you have time to go over how you might trade? Ooh. Yeah, all right. I can go over that real quick if everyone wants to stay. Do you have a trade you're looking at? If I was going to trade a diagonal right now, Mike. Okay. If I was going to be trading a diagonal right now, I want something that's going to be going relatively sideways. Would you agree there? So we would have to find a stock that's pretty much, or an ETF really, that's trading sideways. And if I see something trading sideways like the PPH here, it's coming down off the high. It's been in this range from, it is up, but it's up to sideways. This might not be the perfect one, but if I was to trade PPH right here as a diagonal, I would look to buy the November, one strike in the money, and sell a October one strike out of the money. Okay, now this isn't my ideal trade because they don't have weekly options. So I typically only do diagonals and calendars on things that have weekly options. So I wouldn't trade this on PPH. But if the XHB, see here you go, the XHB is going sideways, and it's actually a little more of a downward tilt, I would be looking to sell next week's puts against the November strike in the money, like that. I like the one strike in, one strike out of the money. Okay. And I don't have really much time, but we do look into what it's going to cost me to roll this thing from week to week to week. With a November option, I have the potential to trade. Today's the 20th. I can trade. Today's the 26th. I could trade 1, 2, 3, 4, maybe 5 trades out of this. So I have 4 more trades out of this here that I could trade for this to go sideways, which would tell me that I need to collect 4 into 9 goes 2 times. I need to collect about 23 cents per roll for this trade to be worth it for me in terms of if this is okay. And if I think I can get 23 cents per roll, then I can trade this week to week to week. So next week if nothing happens with this trade, with this stock, next week the October 2 weekly options are going for 40-something cents. That's 20 cents above my break even. So this would be just on a quick analysis, the XHB looks to be a decent trade for selling a near-term call, a near-term put at the $30.50 line against the $31 put for November. And then rolling this weekly between the 30.5 and the 30. Okay? As my quick kind of 3-minute synopsis or analyzing of a put. Yeah, the class I just did was on directional trades. I'm thinking of doing a second class on calendars and diagonals. Would be another inexpensive class that I'm looking to do. So we can see what interest we have in that. If someone looking to do calendars and diagonals, or we can do some coaching, Mike, if you'd like, and we can spend like an hour or two kind of getting you some information on that. I do personal coaching. I do small classes. I'll put the feelers out there, folks, and if you guys want to do a class, I'll be happy to put out another class. If there's more than 1 or 2 people, I'll do a class for 3 or 4 people. I have no problem with that. I like small classes. On calendars and diagonals, absolutely. I've got trade rules for them, trade setups for them, and I'll be more than happy to. So if you guys are interested, it'll be a couple of $100 for a class. It'll be no problem to do that. It'll be like an hour and a half each day for 2 days, and you'll get all the rules that you need and the setups that you would need. Absolutely. So yeah, if you guys are interested, it looks like Bill and Mike, you'd be interested. I will get it on the Affinity calendar. And even if it's just the 3 of us, I will be happy to do it for you. So I think I have your guys' emails. I'll send you an email, or you can call the Affinity office. Give me a couple of days to get it set up, but I'll be happy to work with you guys on that, absolutely. And we can get anyone else interested in learning how to do that. Sounds good. Are there any other questions? Right now, the market isn't giving me. They are, yeah, that's spreads. Calendars and diagonals are a form of spreads. There are vertical spreads and there are calendar spreads, and these are a form of those spreads. Yeah, the calendar spreads and the diagonal spreads are called time spreads, T-I-M-E, and the vertical spreads are the other type.
I would be able to cover calendars and diagonals in a short class, and verticals would be another one. But yeah, absolutely. Any other questions, folks? No, I appreciate your time, folks. And if you want to be a part of the coaching, okay, great. Yeah, Michael, we'll set it up. Absolutely. If you want to be a part of the coaching, folks, we get involved. We do a lot of trade setups. You get my email support, so you guys can, email me anytime that you need to, and I'll be happy to, analyze a trade, or answer your questions about a trade setup we took. So go to the Affinity website. It's free to get registered there. I'm their options instructor, and get yourself registered. And then we will do these classes at discounted prices for our paid members. Okay, so these classes, I can do this class for like $300 on calendars and diagonals, and it'll be like $200 if you're a paid member. But I'll work that out. We'll get it all figured out. Thanks, I appreciate it. Looks like I've answered all the questions. We got a couple of trades. We'll manage those trades, especially the 4 that I sent in the email plus the Celgene. And I think there was one person that did not get my email I sent out today. Is that correct? Was anybody else? All right. I think everyone got the email. It was just one person. If you didn't, just send me an email at Ralph at Omegatrades. I'm putting my email address in there now. Okay, Art, you did not. All right, send me your email, Art. I knew it was somebody. You might have put it in earlier. I apologize if you did. And I'll make sure you're added to the list, okay? You can either email me at Ralph at Omegatrades or throw it in here into the chat, and I'll forward you the email that I sent out with those trade setups. All right, the recording will go out later on today, Ron. I'll get it set up here. It takes about 45 minutes to propagate. Oh, Art, you missed the at something. I got the first part at. I'll show you what you sent me. Oh, there we go. Thank you very much. Good. Let me just write that down. Art, and let me write that down. All right, folks. Thank you so much for your time today. Oh, Mike, you didn't get it either? Okay, so I'll send it to you, Mike, and I'll send it to Art right here as soon as I get out of here. That's cox.net. All right, so I've got both of yours. Thanks, folks. I appreciate your time. Make sure you go to Affinity and get registered, and I will see you all next week. Look for my emails on Sunday, Monday-ish of next week for the next set of watch list. And then we will, someone asked me, when do I send out the email for, a trade setup? Well, I kind of send them out when they're setting up, I can't, like for example, I sent out an email today because there was more than one trade that was triggering. Macy's was triggering, UPS was triggering, so I sent out a nice, I sent it out because that's when the trade was. I can't say, hey, Monday at 9 a.m. Eastern it's going to go out, because I don't know if the trades are going to happen then. All right, folks. Thank you so much again. I'm sorry my voice is killing me. Sorry about the audio issues as well. I'll get this recording up and running to you guys as fast as I can. And I look forward to seeing you guys become members if you're not. Please consider doing so. And I will talk to you guys soon. Take care, folks. Bye-bye.